Antesh Sabarat is with us, Deputy Head Research, SBI Cap Securities. Sushil Kedia is founder, Kedianomics, a veteran technical analyst, also joins in. Gentlemen, thank you very much, both of you. Appreciate it. Mantesh, quick question to you on the market itself, aggregate market itself. Talks around Brexit, etc. Brexit, no Brexit, where is the market headed? Do you see upside?
I think one can really gauge into the global markets from the statements from the Fed that have come, or whatever we can read thereof or interpret thereof. The very fact that Fed is looking at a delayed Fed hike tells us that something is wrong with the US economy. Not only that, the Fed has also alluded to the fears about the Brexit causing financial woes. And you have the Bank of Japan also really concerned. China has its own set of problems in terms of a possible credit bubble burst. So all in all, the fundamental outlook for global markets seems to be very poor, or it's a little drifted downwards from what the assessment was a couple of years ago. But the good news is that while the global financial woes continue, the liquidity injection doesn't stop. In such a scenario, markets like India will continue to receive the doses of fund flows, and therefore we should have better markets ahead. Not only that, India's fundamental trends seem to suggest that we are on a strong and good sustainable recovery path. As an economy, as most corporates, profits are concerned, on consumption, on private investments, etc.
Consumption, private investment. I don't know about private investment, but consumption, yes. Right?
Yeah, so it begins with consumption first. So we will see possibly post the monsoon consumption picking up first before the private investments start participating, because consumption
I think urban consumption is what we should focus on, because rural consumption, semi-urban consumption has been extremely poor. I mean, if you look at the one data point, right? Consumer durables, consumer non-durables data. I mean, so urban consumption has been doing well, but rural, I guess we're all waiting for rains. Have you looked at the latest data though on monsoon progress? Some 20% deficiency.
22% kind of deficit, but then that's expected because it's delayed, no? So the moment you have a 1 week delay, then you are possibly talking of, from a country as a whole, you're actually talking of close to 10% for monsoon deficit already. So we are 1.5 month to almost close to 1.5 weeks to 2 weeks kind of delay in terms of monsoon. And that doesn't mean that it pushes the calendar sort of forward.
Sushil, good morning.
Good morning.
Where do you stand on markets?
To connect the thread on global markets first, see, equities in the 4 or 5 key markets are moving very differently. Nikkei continues to be in a strong downtrend. S&P 500 is struggling near that all-time high, trying making multiple false breakouts and, to my mind, constantly forming layers of bull traps. The DAX index is behaving a bit similarly, and China has been, always that bull in the China shop, always doing its own different thing. It is in a persistent downtrend which has met with some sort of sideways movement for the time being, but not as strong and immediate a downtrend as the Nikkei. But broadly speaking, say if I were to look over the next 3 to 6 months, that also does not give any sort of a contrarian hope for, sort of buoying up global equity books. Having said this, when I jump quickly to the major currencies, the rally in the dollar index, which one spoke with you last, is going to be an interim thing. While the movement on the dollar index looked like to be only an interim rally, but if I'm looking at, say, the major pairs, the Euro USD or the JPY USD, there isn't really sort of, and the other pairs, the GBP as well, there isn't really enough evidence from these major currencies right away that a strong downtrend in the dollar index should come by. Now, when I also connect this with, the anticipations of a fear trade as getting reflected in gold, while I maintain my longer term view that gold will break 2000 before breaking 1000. For the time being, this rally also that we anticipated from 1200 onwards to 1300, it seems to have expired. Now I'm cutting down things to the shorter term.
But you connect all three, so global equities, currencies, commodities. I think what you're getting at is that it doesn't look like this is a market set to break out. I mean, at least, right? Risk assets, essentially.
No, I'll come to that quickly further.
Because markets are going to open. So if you want to conclude in a line, you can conclude, or we'll have to wait till... Okay, so I'll just come to you, Sushil, for the conclusion. So he put out all three asset classes. 155 points on the Sensex and about 36 odd points on the Nifty is what we have as far as start goes. HDFC Limited is up 1.7%. Bharti Airtel is up 0.5%. HUL is up a third. Aurobindo is up 3/4. HDFC Bank, BPCL, Cipla, Lever, it's all green. I mean, all mostly up at this point in time. So, HDFC Limited, Tata Motors, DVR, ICICI Bank, Dr. Reddy's are up 1% each. And you've got two stocks in the Nifty lower, Bharti Infratel and Tata Power Limited, which are down. So, HDFC Limited is up 1.7. If you can look at Max Life Insurance, that, by the way, is also looking up. We do have Max Financial Services, essentially, is the stock. It's up 9%. So that's a large move, 465 on Max Life Insurance. It's the, only pure play life insurance player listed. So 466, 9% higher. It's a strong move. Sugar stocks are all correcting a little bit, so 20% export duty. Government's first sort of shot fired to try and control sugar price rise. I don't know how much sugar is actually exported for this to have any meaningful impact. Not much, actually. But, it's down. Stocks are lower. They've had fantastic rallies. So natural that after something like this, stocks correct a little bit. And there are some other stocks with news flow which we put out earlier, V-Guard, etc. V-Guard is up about 5%, 61, 62 rupees. There's Kajaria Ceramics, which is up 1.7%, Indian Oil, and you'll see those stocks up on the screen. It's overwhelmingly positive. By the way, Bharti Infratel is down about 3% or so. So there's some meaningful weakness there, 337 on Bharti Infratel. It lost about 5% yesterday, it lost 4% the day before. So in 3 days flat, it's lost almost about not 15, but 14% or so, close to that. So, I don't know what's happening here, but I'll get to Mahantesh for his thoughts on this one. But beyond Bharti Infratel, there's absolutely nothing at all. I mean, Tata Power is down under 1%, Sun Pharma is down a quarter, Lupin, Infia, actually absolutely flat. So, it's not a bad start with about a 50-point gain, 81, 89, 81, 90 is what you've got on the Nifty. Day before yesterday, we got that big rally, 90 points. Yesterday, the market sold off 65. Today, we're starting up 49, 50. Let's see what the market wants to do. Let's look at the broader markets. I think we're already doing that. Everything that's moving with price, volumes, etc., they'll be up on your screen. Sushil, back to you. Just complete that point that you were making.
So, see, now I'm connecting things back to the shorter term. So the way you saw a massive reversal movement in gold yesterday, and it's not able to break past 1300 as yet, also tells me that the fear trade is not going to get into place right away. While, the equities broadly that I told you are also not looking bullish. So maybe over the next month or two, markets will adjust. And right now, across various asset classes, that correlations are really poor. And each thing is doing its own thing, which in traditional finance has had been understood over the last 10, 20 years how markets have behaved. That a low correlation atmosphere is a atmosphere that is good for investing, or it's an atmosphere of goodness. But as change is the only permanent thing. Right now, a low correlation market is, I think, elusively hiding the fact that there is trouble brewing in.
Okay.
But perhaps, we will get time for the next month or two for various adjustments and alignments of markets to happen, where after very strong and ferocious trends, a massive up move back in gold, maybe after testing 1200 or lower, or, the massive reversal in equities can happen. And having said this, to put it in simpler terms, it's a trading market over the next month or so with downward bias in equities. And who knows, that massive clarity and breakouts can develop sooner. But as of now, I don't see a ground to make a thumping the table kind of call that Nifty will drop by 1,000 points, which eventually will likely happen. But I will cut it to say, we are right now headed to 7,700, a tentative trading bet. And if that does not hold, maybe you should revise your targets downwards. Though there is a little more clarity on the Bank Nifty index, which actually gives me the courage to still stick to an idea that a risk of a 1,000-point drop on Nifty and a retest of the budget day lows is still open. The Bank Nifty looks like over the next quarter or maybe a little more is headed down to 12,500.
The Bank Nifty.
That's a much more clearer pattern. And whether the private sector banks have formed a euphoric high pattern and the public sector banks are all into a distributive pattern, so anytime a downside trigger in them. So maybe on the downside on Nifty, the banks will be really underperforming. Say, let me put it this way. There's a much more clearer call one can make that there's no bullish case on the Nifty right now. I'm unable to find any single sector or stock on Nifty that can create sustained upthrust. See, the IT stocks are not really giving any buy signals here. The pharmas have been in a downtrend, maybe, they will bottom out sooner than others. The autos that really rallied after that budget low, I think they are all ready for a nice thump, thud downwards, a 20-25% kind of 30% drop in them. The cements are not looking good. So there is really no single sector that I can hang on to if I'm a hopeful bull on Nifty. And that makes me for a cautious bearish short trade, which will become a thumping the table call should 7,700 break.
Okay, and Bank Nifty you said, sorry, what was the level?
The clarity on Bank Nifty is much more right now. That seems like a clear-cut case. And if that really materializes, maybe that will lend credence to an idea that Nifty
No,
will
you
also
put out a level, right, on Bank Nifty?
12,500 is where I think final low should head. See, the markets in India that have been correcting for over a year and a half, so one final leg is remaining in them. So whether or not Nifty goes to an all-time new low, the 12-month low, Bank Nifty looks clearly headed down to that 12,500, 13,000 area.
So can Bank Nifty is about 18,000 now, right? Can Bank Nifty go to 12,500 and Nifty stay here?
Unlikely. No, obviously not. So all I'm trying saying is that there is a much clearer pattern on that.
Bank Nifty.
And on Nifty, there is a slightly hesitant pattern which would get confirmed should 7,700 break.
And for Bank Nifty, what kind of, is there any way to talk about a timeline, etc.?
Say it's about 3 to 4 months.
3 to 4 months.
I'm not talking long term here.
Okay, fair enough. Mantesh, just a couple of things. Bharti Infratel, hearing anything on this one? It's correcting.
So, if you look at and scan the environment of what's happening with Bharti Infratel, then you will notice that from a fundamental perspective, competition is going to come up in the form of Reliance Jio, but at the same time, from a tower perspective, the business, some rentals useful rentals might actually come in. The second development is that they have announced a share buyback, which is amounting to roughly about 2,000 odd crore, although the total shares that they will end up buying will be just about 2.5%. And the other thing that we are looking at is the talks that media is reporting about possible acquisition of Tower Vision assets. These acquisition will actually further bloat the debt levels for Bharti Infratel. So between all the scan that we can see, the outlook therefore for Bharti Airtel seems a little difficult. In the sense that there will be additional debt to get growth, to secure growth. Even if they are growing with the help of Reliance Jio, possibly the rentals are going to go down in terms of rates. And the third thing, the buyback is not going to move the needle. So all said and done, I think the stock is correcting for that reason, those reasons.
There's, I think the management is meeting analysts, etc. as well, right? Maybe to kind of sort of explain.
We will see about that because I think they keep meeting analysts from time to time, and we might get further clarity on the business ahead.
But we've heard, more than a few are actually flying down to Delhi to meet the management, so maybe something brewing there. State Bank of India subsidiaries, if we can put these up. So Mysore, Travancore, Bikaner and Jaipur. I mean, they're all up again. I mean, 5 to 10% gains. Mysore is, State Bank of Mysore is up about 10%. Travancore 7.5%, and Bikaner in Jaipur is up 9% or so. I mean, I'm assuming you don't want to comment on.
No, I will not be able to
companies.
comment on anything on the State Bank.
Yeah, sure. So that is that. What else is happening on the? Okay, so the other one is Max Life, Max Insurance, and HDFC. Any thoughts on this one?
I think this is the consolidation phase that has begun for life insurance companies. In fact, they will also be in a mode of listing themselves. So there is a great deal of value accretion that we will see for the insurance sector per se because of all these moves, and therefore some of these companies do look attractive. So the best way to play any of this, so you did mention earlier that Max is the pure insurance play available, but then you have others also in a way available to play the insurance sector. There is HDFC Limited, for example, likewise ICICI Bank as well. So I think overall we will tend to remain very bullish on the insurance sector because of the value creation activities that we are seeing right now.
Okay, so that is the call coming in on insurance per se. Sushil, so let's just, I'll get to global oil, etc. specifically, but let's just wrap up India per se. So you're cautiously bearish, right? Maybe short, etc. But what exactly would you want to do here as far as markets go?
Nothing to buy, and use rallies to sell. Much clearer and larger short positions on the PSU banks for now. The private banks are making reversals, and as they confirm those, the short trades will come in place in them also over the next some days. Reliance continues to look weak, so that's one stock in the list of things to short. Except for say a small BHEL or a Airtel that may sometimes, an Idea Cellular that may sometimes, give a small 10-15% pop. Broadly from the Nifty 50, I mean, I'm just inclined to keep only finding short trades for the time being.
On the Nifty itself, I can sense you don't want to say it right now, but you do expect a large down move at some point coming.
Yeah,
in the foreseeable future.
So, to simplify things, if you were to usually trade 100 lots on Nifty, in terms of money management or controlling your risk, you would perhaps trade right now 50 lots short, and should 7700 break, you take full exposure and go all in. So that sort of a clarity perhaps exists in the bank Nifty, and even there, the rules of speculation are simple. You keep on pyramiding your positions as you succeed. So what I wanted to say was the pattern is much more clear on bank Nifty for a large downside, and that might create that large downside on Nifty also. But as of now, I'm just...
Have you looked at private banks individually? Where
the private banks are all, forming that final euphoric ecstasy sort of phase. So a safe thing to say is, it's time to take profits and get out of them, those who are holding any longs. And a time to short in them will also come. They are lagging the cycle. So as you see substantially lower closes and trend lines breaking and any methods people use for trading. So I think, they're cycling out there. But say an ICICI or an SBI, I would classify as stocks that are clearly forming strong distributive patterns only on an interim rally. The private banks that have sort of made significant highs and new highs. So that's where, that ecstatic reversal might come in place over the next some days.
Mantej, I know you have to go, so I'm going to thank you for your time here. Appreciate it. You've got a meeting, so thank you for joining us. Sushil, just a few more questions to you. Any other, oil, for example, we do tackle these when you're here on the show. How are things looking there?
Oil has popped out, it's made a sharp, significant reversal. It's broken the uptrend line formed right from the all-time lows up to this point. So I would say 42 is one fulcrum. If without breaking it, it reverses again, it might still be good for 60, but once 42 breaks, all bullish bets are completely off. And the downside could be far deeper. So oil has been like really volatile and not an easy one to trade, so to say, despite these very large moves. So 42 is where I'll keep it as a make or break level for now.
I think last time you were on the show, you were saying that maybe you should look at oil upstream companies, ONGC and namely.
Right. So I think markets have sort of postponed that.
Yeah.
BPCL has gone into a further high,
Yeah.
and ONGC is still looking like making a bottoming out formation. Use that call of mine, which I discussed with you last time, not as a trading call, but more like for strategic portfolio moves. If you're taking a 1-year view, so to say, it's time to convert your BPCLs and HPCLs into ONGC.
Okay.
Which you do over a period of several months.
Sure. What about gold? You said it's not as if it'll get to 2000. You said
no, that's the long-term call remains intact. But right away, the way there has been a divergence in momentum and the kind of very sharp day reversal that happened yesterday. Looks like for short-term traders, gold is headed down to 1200. If you are indeed trading on a very short term. Given the long-term trend is strongly up, it has to be a smaller, nimble-footed position. A dip down to 1200 and maybe even further lower is looking like is happening in the very short run. But on the long run, I think, maybe before breaking 1100, we are headed to 1500 on gold. And maybe before breaking 1000, we are headed to 2000.
Okay. Anything interesting other than what we've discussed, which you like to highlight? Any other asset classes? Anything worth discussing?
No, the real interesting thing to note is, the traditional wisdom of how markets are correlated and people would draw intermarket analysis inferences. It's a very tricky time to
do that.
Clearly avoid looking at any correlated ideas, though it's very difficult to, give up one's intellect. But right now, I think the market is demanding that just be disciplined and keep your intellect right in the cupboard while you're trading the markets. Just go with the flow.
All right, Sushil, it's a pleasure. Thank you very much for your time and for that advice. Appreciate you joining us.